All right, everybody, welcome back. So if you're kind of new to the morning briefing, maybe haven't heard this spiel before, sure, I give you my take on what's going on. We look around and see what the market could do today. But I started these morning briefings to get you to the point where you can do them on your own, because you're likely going to want to cover things that I don't cover, right? And once you learn the steps, the process, you see the different tools that are out there, and you get a consistent approach or an example of a consistent approach, then you want to start to deviate and add to it in a way that suits your needs. This morning I was talking to somebody who likes to trade equities more, and they were looking for a reason that a stock did something. So add to your resources this company here. This is FinViz. I don't usually go over here in the mornings, but I don't need to, right? It doesn't fit into my needs as a part of the morning briefing. But you need a news aggregate site. Generally, I show Finance Juice. This is a news aggregate site, but this news is more about economic events and bonds and treasuries and governments around the world. So, useful for sure, especially on the intraday, trying to figure out what's moving markets, like the indexes. But FinViz is even a free one. I'm not logged in. I don't have an account here. You can look up an individual stock and scroll down and get to the news on that stock. Now, if you have Thinkorswim, you don't need this because it's already in the bottom, right? Like here, I can just bring up a stock. I've got the news down below, and it's aggregated news from all over the place. But not everybody has Thinkorswim. So if you're not using Thinkorswim and you need to have something that can give you an aggregate on news for a particular stock, this is not a bad place to go. Now, the ads will drive you completely crazy if you're on the free account. It's frustrating, but it's free, right? And it does do a really good job of just aggregating the news. And you don't need to necessarily read these. Some of them aren't free either. You try to click on it, they want you to sign up for wherever that news came from. But usually the headline alone will give you the information that you need, like why did a particular stock go up or down? What was the background or the headline on that news? So check out FinViz if you haven't been there. You don't need an account, but I have had an account here over the years. I kind of cycle around through a couple of different places when it comes to having accounts. I miss having them, but it just doesn't cover everything I need, and I've got other services. But even the free one can get you pointed in the right direction. So that's FinViz. Looking at what we've got this morning, the UK's up 1.5. Japan's down basically flat, maybe near a quarter at the most. Hong Kong flat. S&P, Dow, small caps, all just holding sideways, waiting on data. We're going to get some job numbers this morning, and it's not the biggest job numbers. It's just some of the job numbers, right? We've been getting job numbers all week. The Fed has a dual mandate between fighting inflation and fighting employment. Well, they've already announced last year, right, that they had solved the inflation problem, at their words, not mine, and that they were going to focus more on employment from here on out, which means we have to focus on employment from here on out. Any employment numbers at all that could adjust the Fed's take on their policy stance and where neutral lies, all of that stuff. And to keep track of the Fed, there's a free website called FedWatch. It's from the CME FedWatch. So if you're on Google, just type in FedWatch. You'll get this page. You don't need an account. Doesn't cost you anything. And it has all of this charting down below. Now, I get it. If you're new to all of this, this may look very intimidating or confusing, but if you spend a little bit of time here, you'll get really comfortable with it. It's not a lot to it, right? It just looks a little different than maybe something that you're used to. It'll show the FOMC dates up on top. So we can see the next one is mid-March, which is what we're looking at here. And there's really only 3 choices: that we stay where we are, or that we go down, and of course that we could go up. But they are showing 3 choices at the moment. There's times where you'll often see 3, 4, or 5 different choices. You know, if you go farther out in time, you can keep track of these, especially when you hear people say, oh yeah, no, it was already priced in. That used to drive me crazy when I was newer to trading, because I couldn't understand, one, how did you know it was priced in? And 2, what are they pricing in, right? It just seemed very vague, off the cuff kind of language. So when we get new data, the idea of the market is that they want to adjust their perceptions on what they think the Fed is going to do. When the Fed has given us very clear signals, there's not much to adjust, right? If they say, hey, we're going to cut at the next meeting, well, we don't really need to guess if they're going to cut at the next meeting. We know they're going to cut. They told us they're going to cut. And if they said, we're not going to cut, we're going to pause and wait on data, then we know they're going to pause. But when things are uncertain, when they're talking about, well, let's look at the data and then we'll decide if we're going to cut, well, that leaves the market in a bind. And then everybody starts making projections. Maybe they're going to cut because of this data. Oh, they won't cut because of that data over there. And then we get less clarity in the market. So we can see collectively where they're putting their money, right? The old phrase, don't follow what they say, follow what they do. Or the other phrase, put your money where your mouth is. They can go out there chipping their teeth all they want, but what are they trading? What are they proposing with their money that the Fed is going to do? And this is a good way to keep track of that. I wouldn't recommend sitting here staring at this thing all day, seeing if it's moving up or down, but it doesn't hurt to at least keep track of it a few times during the week. Maybe make it a part of your morning routine that you just drop in and see how much things changed in the last 24 hours at least. And if you're only stopping in maybe once a week or so, look at it on a week-to-week basis and see what's really changed in the last week. So on the calendar today, we have all day long something coming at us. We get through the job numbers first. We have auctions when the EU closes at 11:30, and then we've got Fed speakers in the afternoon. Now, if you're trading tonight, you'll want to be a little careful, because we're going to get the Bank of Canada out there, and we've got Logan out there tonight. That's worth keeping an eye on too. And if we have an auction anywhere, just assume that there are auctions at the other spots. There's 3 spots where we have auctions. It's 11, 11:30, and 1 o'clock. When you find something like this where we just have an 11:30 auction and it's not showing something for 11 o'clock and 1 o'clock, just go ahead and assume that there's going to be auctions at 11 and 1. Remember that they don't put all of the economic events here or any of these sites. You can go to as many sites as you want. You'll never get all of today's economic events. 1, there's our own economic events. 2, there's events all around the world. And some of them, they just don't get the news coverage because they're deemed, below the interest of the normal trader, so they don't get listed. And sometimes those unlisted events move markets. You can't find them all. Don't even bother. There's hundreds a day. Even something like how much grain leaves the harbor in New York. That's another economic event that comes through weekly. So don't try to find them all. It's like chasing your tail. Instead, just keep track of the time. Government is very simplistic. They're going to hit things on the hour, on the half hour, and occasionally we'll get those, quarter hour events. But most of the biggest events are on the hour or on the half hour. So you can just watch the clock, which is why I say all the time, watch the clock. You can't predict every economic event that's out there. You can't find them all, but you can see, hey, we're about to get a new hour. We're about to get a new half hour. We do got Amazon earnings tonight, and this is the other cloud services company, right? So far, Microsoft and Google coming out with their earnings, it hasn't been looking too good. Maybe they're changing they and others are getting heavier into that LLM development, right? Like maybe that's part of it. There's a lot of new technology when it comes to other ways to do things besides cloud services. Edge computing, the hybrid and multi-cloud approach, the DDS, decentralized data storage approach, and retrieval augmented generation, which that one I'm not familiar with, but there's more than one approach, and cloud services are not exactly, the only way to do things anymore. So let's see what we get with Amazon. Someone who proposed yesterday, I thought it was interesting. It's why I started digging into this, is if there's 3 major cloud services companies and 2 of them didn't do good at earnings, say they're losing clients or customers, they're just not generating the amount of revenue that they were, maybe the third one is getting all the customers. I don't know what to think about that, right? Maybe they're getting all the customers. Maybe the customers are using newer technology. I don't know, but it is something to think about. I'm going to try to dig deeper into that today because that'd be a really nice play, right? If it's a 3-legged stool between Microsoft, Amazon, and Google, and 2 of those companies are losing clients and customers, maybe they're going to the third one. Yeah, see here, when we come over to Thinkorswim and we look at today's calendar, we've got auctions at 11 o'clock and 11:30. We were only seeing 11:30 on that other site. It didn't have auctions at 11 at all. And I would bet if we kept digging and looking around, we would find a 1 o'clock auction somewhere. So it just kind of reinforces the point that I was making. If you have any auctions today anywhere, just assume that the other 2 time frames have auctions as well. Thought I had that updated. All right, so yesterday we talked about that put wall getting rolled up, and I mentioned how it was likely a temporary situation, and that it wasn't quote the better wall or the right wall. And now we find the put wall moved back down again. It didn't stick; it was a bit transitory. Now we'd have to get an inside week breakout to challenge that put wall, 59.25. And to be fair, it is higher than it was before it got rolled up earlier this week. But it's not as high as yesterday, right? So there is that. We're still dancing around 0 gamma and the volatility trigger. And when we scope out, the call wall is still same spot. So it's not exactly back to status quo since the put wall is a little bit higher, but at least it's not tangled up with us. When we look at everything else that we have, the 10-day, the 20-day, the 10-week, we've been sideways long enough now that everything is just starting to coalesce right at this level. Now, it's messy and it's nasty for sure, but the longer we stay here, then the more that we're going to build structure above and below this level. And if we look back a little bit to the December 18 FOMC meeting, the candle of control that we've been talking about since we got that candle, it's still in control. Sure, we dipped out of it, but if we're looking at reciprocation, we could get the same measured break from the downside on the upside, and we would still be just sitting in this range. We got to get out of this box. But the market is still waiting on clarity on a lot of things. So that's the missing ingredient. Doesn't mean we can't trade. From a day trading point of view, there's been plenty of movement, lots of opportunity, really good clean setups. But when we're trying to scope out into a bigger time frame, the middle of the road swing traders are the ones that have it the worst. If you're day trading, you've got it good. And if you're really long-term trading, you've got it good. Short-term trading, if the market is running sideways, then about 80% of the market is generally going to be running sideways. Typically, we'd want to be, looking for long opportunities when the S&P and the NASDAQ are trending well to the upside. And we'd want to look for short opportunities in equities, right? That's what we're talking about. If the markets were trending to the downside. When the S&P and the NASDAQ are just chopping violently, looking for clarity and data and guidance, so is the rest of the market. And you're going to find it a lot harder to try to play themes, sectors, and groups, peers individually. As a stock pickers market, if you're just going in and hitting on one company for its own reasons of moving, you'll do all right with those to a point, as long as it's not fighting against whatever we've got that day. But that's been the trouble, right? So if you're struggling with it, just kind of realize until we get clarity in the broader market, a lot of the themes, sectors, peer group plays, industry plays, those aren't going to work like they normally do. Since we're basically flat this morning, we have no edge on which direction we're going to go to hit one side or the other here. It's worth noting that we can hit the lower edge and we wouldn't need to be breaking out of yesterday's low to do it. With the inside breakout that we have right now, we've already tested it. It looks like it held like a bit of a Busby. So the easiest way to kind of mark that out, put your chart on a daily, use whatever the broker decided was the daily close. There's your bounce. So we're inside day breakout. We need to keep it. And the fact that we've already come down and tested it, it's kind of a good thing, right? It's good when you test resistance multiple times and finally get it, break out and break through it, come down and test it. What isn't so good, though, is that we ended up making this lower low. So now on the run back up, it's got to get all the way back up here and give us another higher high. We're through the half. Well, we're fighting the half. So one step at a time. Get back through the half, make it back up to the Globex high. Then we've got a shot at 61.32 cog line Otherwise, if we break back down below our own Globex low, then we're back inside of yesterday's price action. We've got a shot at 60.50, which is a big options level. It'll act like a magnet that would draw us to it. Cut through that, and we've got the Globex low of yesterday, which is close enough to the 60.11 cog line that we'd probably overshoot the low of yesterday, get the cog line, and get this lower ADR. It's good that we got that gap closed and we were able to finally get through it, get above it, challenge it multiple times yesterday afternoon, and it held, and we continued to drive beyond that. So I like that we got this gap closed. If you think about the other gap that we had, right, that one from DeepSync, we got through it and then just took a beat down, right? I mean, that was a lot of fun. Made some money on it, but it would have been better if we could have held that, right? Held that and then challenged the high of last week, had a good breakout from there, and we didn't get it. So this gap that we've resolved, we're at least doing better than that last one. We're back above the weekly floor pivot. That's a good start. But today's floor pivot, it's got a really wide channel on it. Wide channels imply that if we break out, that the breakout doesn't stick. Well, surprise, we've already broke out. Now, these channels don't make price break out, and it won't stop us from breaking out. So if we stick to the logic of these channels, it's really telling us that this breakout isn't going to hold and that we're going to come back inside of yesterday's price action. It's also an MDP at this point, but it won't count until tomorrow. That's a missed daily pivot. Markets have a history of hitting their floor pivots most days, right? The stats are about 80%. So we can rephrase that language a little bit and say that there's an 80% chance we're going to hit that pivot. We don't have to, but that's the odds, right? That we would hit it more often than we wouldn't hit it. And if we turn on the S&R lines, R1 is 6114. So we've got 6100, big round number, 6111, cog line, and then overshoot that into R1, 6114 and a half. The S&R levels are not as wide as they were Wednesday. They're starting to contract again, narrow down a little bit. But they're not crazy narrow like they were back here 2 Mondays ago, right? This was a very narrow range. The S&Rs were really close together. It would have been easy to hit these S&R levels. These are much wider. So just getting to the R1 would be a trick. Getting through it, above it, try to get even higher. We're going to need some significant news to do that. Otherwise, breaking through the floor pivot, getting back through the weekly floor pivot, and then challenging that lower S1, 60.42. That'd be challenging enough getting through that, yesterday's low, and then 5,600, big round number. There's cog lines down there, and S2. We made it through last week's point of control also. Looks like we tried to Busby off of it. It's a resistance that we managed to get through and then checked it or validated it for support. Now that we've checked it, it needs to hold. We don't want to come down and try it again and have it break on us. Otherwise, we're headed back to 60.50, which is this week's point of control. You can see when we look back into last week and how it checked the previous week's point of control. And we managed to pop through it for just a little bit and then dumped right back down through it. So now in our current situation, the concern is that we're going to do the same thing that we did last week. Break through it, hold for a little bit, and then dump back down through it. If you've been trading for a while, you kind of get the logic or the idea that a market doesn't want to drop in a straight line, right? We don't want something like this back here. We don't want that. What a market generally wants to do so that it doesn't freak everybody out, scare everybody, and so that they can continue to sell to you when they want out, is that they'll run it down in the daytime, pop it back up some in the overnight, run it back down again, pop it back up a bit, run it back down again. Kind of get the idea, right? So if they're trying to get out of a lot, they're going to continue to try to sell it to you. So they've got to convince you that there's still some opportunity. That gives us those lower highs and lower lows. And it gives them a time to get out. So we can see that, take it out to the daily on that big move there, right? Same thing, lower highs, lower lows, just a lot of exiting out of the market there. But we ended up getting a TRB running back up, challenging the high. So, okay, great, we've done that. Now what are we getting? The same thing again. It's not as clean and pretty as it was the last time we did it, but it's the same thing. And it's still just a really big, wide topping pattern. We've got to get this resolved. We got to get out of the box. Everything that we have in trading, there's nearly always previous examples, right? It's very rare that you'll hear an analyst say, oh, wow, I've never seen that before when it comes to charts, right? Because, I mean, price can only do so much. And so it's probably already done it before. The situation we're in now, it's very much like the situation we had back in August with the VIX spike into 65 and the Japan carry trade unwind, all that big mess from back here. It's just more sloppy this time, and we didn't drop as far. $10-day, 30-minute volume profile, the point of control has finally moved off of that higher level and is now down around that 60-80 area that we've been talking about. And we've got a more normalized distribution at this point. So we're still not lined up with TPO, and that's all right. It's not a game of perfect. And we're above it, which is what we were talking about yesterday when I was mentioning that it would be really good if we could get this breakout and then have that point of control get moved down after we broke out so that it's not a resistance against us. Ta-da, we got it. Kind of want to keep it. It's unlikely that we're going to see the point of control move anytime soon because the next area of price that's going to get removed from this point of control is 3 days away. So we would need 3 more market days on the right, removing 3 more days off the left to get into this area from Sunday night 2 weeks ago. So the only other thing that could move this point of control is if price picks a spot and then we get a significant amount of volume at that level, like an iceberg or a ceiling. All right, so yesterday we put this VPOC on. There's a good example of why having the VPOC on is useful. We came up and hit that level and challenged it. Now, sure, we were able to get through there anyways, but that's what we call the first touch play, right? That you can often get at least a good 3 to 5 points on that rejection. This gave us more than that, which is great, but take what you can get. It held for a first touch play, then we ran right through it on the second run and never looked back. So we're done with that, but yesterday did give us a new VPOC level. So we'll just take the line, run it over to the new spot. And I'm going to just start running these on the whole number, get rid of the decimal. It's a zone or a range anyways, right? So trying to get it nailed down to the tick, really just an exercise in futility. Yesterday is what we call a double distribution day, right? This isn't, when you've got patterns on volume profiles, you've got the uppercase P, lowercase b, and then you have a D. What you do not have is a B in a large cap. It would be D twice. So you got one distribution, which is where the point of control is from yesterday, and then you have another one. If you've read the book about pivots that I've shared with people before, that trend day that we had yesterday in all of its glory fit right into the logic of, the expanded initial balance from Globex last night, the double distribution day where we trended, paused, trended again, straight out of the book, right? You couldn't get a more classic example of a double distribution trend. And now we have it on the profile with the VPOC right at that 60-50 level. Now, sure, if I zoom in, it really looks like 60-51 would probably be a little more accurate, but it's in the middle, right? If I pause my mouse there, it's 60-50 and a half. So if I go to 51, then I'm above it. If I go to 60-50, I'm below it. I'd rather just have the line on 60-50 because that's the big options level. This morning's distribution, no real disagreement here, and it's just your classic D shape. So no insight yet. 10-day, 30-minute volume profile really is, the biggest change out of those two charts with that point of control now underneath us. On the week, we're back above Friday's close and holding, right? We got that yesterday. We're still keeping it this morning. 60-50 is the upper edge of the week's expected move. Now, we've been breaking out and holding those breakouts into the end of the week. We've got a lot of examples of that recently, even though we're not supposed to be doing that. It's another sign that there's volatility in the market that's not being priced in. If the volatility was being priced in, these ranges would be wider. So it kind of goes back to generically selling things, right? Because there's a lot of websites and videos out there from wannabe options gurus who talk about selling options on the indexes to make money. If you're selling something in a low volatility environment, then you're not getting enough credit to cover the risks that you're taking. Worse, if it's an environment like this where you actually do have volatility, but it's not being priced into the option, then you're selling it cheap and getting run over because of the higher volatility. We're back above the 10-day, but we're still within the threat zone. We need to get out of that range. Otherwise, it's going to act a lot like a magnet or gravity, and we're just going to hold there. We got to get away from it and really begin to expand like we did here or back here. So we're still at a threat of just coming right back down to that 10-day. But we are above it, so that's a positive. On the 10-week, 1.2%, that's not bad, but we can see these lower highs here as it's been, it's a really ugly wave, but it is a wave. We want to see that pick back up, and since it's the weekly, getting above 1.5 into like 2 and above 2, that'd be really good. That's solid. When we're below 1%, we're too close to the 10-week, and we'll often just gravitate right back to it. We're beyond the 1% mark, so that's good, but it won't take much for us to dip back down, get too close, and then just get drawn right back into it again. So it's good that we're above the 10-week. It's a good start. We're more than 1% away. We need to keep it, continue to expand upon it, and after 1.5 or maybe 1.75, that'd be a little bit better. And that's just a mess. All right, looking at things that are down this morning. It says the 10-year is down. Again, I don't trust Thinkorswim when it comes to the 10-year anymore. Someone was asking me, I mentioned this the other day, and they said, what are you talking about? If you go to the TNX on Thinkorswim, it does this. I don't know why. I haven't figured it out. So when I see the TNX on the watch list, I don't care what it says, right? I just ignore it. And I want to go see TNX, I'll go somewhere else, right? So it says it's down, whatever. I don't believe it. Semiconductors are down. That's the Spider S&P semiconductors, XSD. And then the Mag 7 down volume is down. And I know that that's a little confusing, but flip it around to see what's up this morning. The KWEB constituents, China, Bitcoin is also up. And then we've got the MSCI, China up, Bitcoin, nat gas, staples, the Mag 7 up, volume is up. I know, confusing. The rest of these that aren't up at least 0.5%, they don't meet our qualifications, right? 0.5% is our line in the sand. But if we're looking for a rally day in the S&P and the NASDAQ, there's a couple of things that I want to see. I want to see the right sectors are up in the pre-market. The Mag 7, chips, Bitcoin. So this is a really good start. Once we get into the trading day, that alone could do it. That could get us a breakout that sticks and we could run. If we can add bullish options flow to that, then it's even better. And if we can get just a little bit of economic event news that either isn't negative or is positive, that'll add to the breakout and a continuation, and we can try to get a nice follow-through day. So we've got a good start with the names and the sectors that are up this morning. We had 69,000 in the overnight volume. That's not bad. It's a little lighter than what we've seen lately, but it's still well within the normal range. Anything above 40 is okay, right? If it was below 40, we'd really want to find out why it's so low. Maybe a nation is closed for a holiday, or there's some sort of economic event that they're all waiting on, and they're just not trading because they're waiting for that event to hit. If that was the case, we'd be looking for signs that they're hedging, maybe a market maker move signal or something like that that tells us why they're sitting out, why they're concerned. We can see they've got some plays on this morning, but not enough to change the implied volatility average or to indicate that they're adding additional hedging. Airlines, precious metals, both of those are down. And bonds, but not enough, right? So that does say that the TNX is up a little bit since bonds are down. But they're not down much. And that was a big drive up anyways. It'd be healthy to digest that move a little bit. Two ways you can play that. If you're in that TLT trade, measure the half point of yesterday. That'd be a line in the sand you'd want to keep it above, or at least just use 89. And then you can measure the whole thing over the last 2 days from February 4 and February 5 and mark the midpoint on that, which looks like it'd come up to about 88.5. This blue line is the year-to-date anchored VWAP. Now that we're above it and it's already been tested and it's holding, we need to keep that. So that's a nice line in the sand if you're thinking about selling some puts to finance those calls on TLT. Something like, some kind of put spread with 87 as the midpoint, or a put spread under 87. Pot stocks, we're getting some flows. Looks like we're getting a little bit of a carryover today. Then we've got the China group, Baba, Baidu, JD, all those guys. The Bitcoin group, Mara, Hut, Hood, Riot. The uranium group, we got those SMRs and those the whole uranium trade just seems to tie back into the AI and the data centers and that whole trade, right? So it seems like we're getting a little lift on that. It could tie back into something like OKLO. That has continued to be just crazy. And then there's SMR, that small nuclear reactor. Not quite as good looking as OKLO, but there's a number of names in that space, right? It all ties back into that uranium play, energy for the data centers trade. We got financials this morning. They're not up enough. We need a little bit more out of them, but that's one of the three sectors that we would want for a trend day. So, if we're going to get a breakout rally day, it'd be nice to have the financials with us. So this is a really good start. We just need to keep it. Let's get through the labor data this morning. Listen to what the ECB has to say. Careful at 11:30. Europe closes at 11:30. Then we get into the other side of lunch. And the concern is that if this push that we've had all morning can be attributed to what we were getting out of Europe, and then Europe closes, it can take this whole thing right off the board, right? And we lose all the mojo that we were getting out of Europe on that push. It doesn't look like that's the case, especially since we've already started to draw back. But that would be certainly one thing to do. Watch the clock at 11:30, but watch the clock anyways. That's what I got for you guys. Be careful, be safe. See y'all tomorrow.